We are live. Yeah. Hello, everyone. My name is Mabel, and I'm known on this channel as Auntie Mabel. And today, as I said in the thumbnail and the ad, we have a special guest here today, and we're going to be well. We're going to be well looked after today. So I hope you are all prepared with your questions. Some of you have been very good. You've listened to the instructions as usual and sending questions already. So those of you who have taken the time to send in your questions, obviously we're going to answer your questions first. And any other person in the chat or in the audience can ask their questions later. So we will also do our best to answer those questions. So I'm going to let our guest to introduce herself.
Hi, my name's Manda. I'm a mortgage advisor. I'm a financial coach, and in a previous life, I used to do accountancy. So I did that for 20 years. And then when I got made redundant, I decided to become a mortgage advisor. Mortgage advisor, you'll probably wonder why. It's because I bought my first property at 22, and then I did a let to buy and bought my next property at 27, and then did a let to buy and bought my next property in my 30s. So I've owned I've been a landlord for quite a few years, so I rent property, and I like to help first-time buyers and people just understand how mortgages are, because I really believe it's important to have the education as well as just doing the process of getting someone's mortgage. So that's a little bit about me.
Thank you very much. Yes, and for those of you who don't know, Amanda is somebody I met sometime last year. We were in a business group together. I have been talking about that business group or club or membership club in some of my videos. So you can see when you set time aside to develop yourself, you meet some very experienced and knowledgeable people along the way who can become your lifelong friends and who can collaborate with you, who can support you, who you can even pick their brains from time to time. So yes, thank you very much, Amanda. Thank you very much, Manda, for coming today. And I can see some people in the chat already. Thank you very much for coming to support me. Luana and Mary's Lifestyle TV, thank you very much for coming. As I said in the intro, we're going to take some of the questions that were sent in already. Then if you have your own question, you can start thinking about it. If the question that has been sent, it doesn't cover your own question, by all means, put your question in the chat. So today we are talking about mortgages. We're going to focus on mortgage questions, everything around mortgage. I must say, Manda is an expert in mortgage. I'm not just saying it because she's here. She's something she talks about flawlessly. She says it's just something that flows. Whenever you ask her questions, she's one person that when you ask her questions, she's not referring to her notes or something. It's just like a way of life for her. So we're really honored. I'm really pleased to have her on the channel because I believe she's going to answer all our mortgage questions today. And at the end, Amanda is going to be able to tell us or tell every one of us here and the people that will join us later how you can get more of her knowledge, if you have the platform where you can reach out to her or be able to access her knowledge and experience, or even gain more knowledge around mortgages and other things. She talks about other things, but today she's focusing on mortgage. So we're going to start with our first question. So please bear with me. I'm going to look in my notes because most of these questions were sent in via WhatsApp to me.
But Mabel, I just want to say thank you for Well, it's a pleasure to be here, and I love us supporting each other, and I've really enjoyed meeting you too. And yeah, I completely agree. We have, we really have connected, and it really is a friend for life.
Thank you very much. Right. The first question. This was sent in by a gentleman. He said, my wife and I are concerned about the current interest rate. I know someone here, Luana, doesn't live in the UK, she lives in Switzerland, but I'm sure you are aware, Luana, what the bad interest rate that is going on in the UK. Obviously, I'm sure it's not even only in the UK, or the inflation stuff that's going on around the world right now. So, and those of you who will be watching as a playback, I'm sure many of you will benefit from these questions and the answer that Amanda will be providing to our questions. So yeah, the first question is from a gentleman who said, my wife and I are concerned about the current interest rates. I'm 38 and she's 36. Our plan was to buy our first home this year, which is 2023. We have 10% deposit plus solicitor, moving and other costs. They seem very well organized, Manda, don't
They do, they do.
Yeah, they plan everything so well. Then, but we desperately want to buy. Okay, so the concern is about the interest rate, obviously. But the thing is that they desperately wanted to buy before I turn 40. That's before the gentleman turns 40, which is November next year. He's turning 40 November next year. He's already 30. He's going to be 39 this year. So, but his plan was, he has been planning to, as we all do, you plan over a few years for the mortgage, isn't it? So they've been doing their planning, but now the interest rate have threw their plan into disarray. I think this is peculiar. This is not peculiar to them. It's quite a few young people or young adults, or a lot of people who are old and young, are in this same predicament. So please, over to you, Manda.
Yeah, so yeah, I get this question all the time. Should I buy now or should I wait? And what I would say is a couple of things to consider. Now, firstly, if you're buying a property and, it's all about just getting on the property ladder and you're not concerned about where you're buying, then there are still some properties out there that are a decent price. The other thing to look at when you're looking for a property is if you can find a property that's a doer upper, because the thing is, because they're putting down a 10% deposit, then the bank will be lending them 90%. Now, what you need to be aware of is with the interest rates, you don't want, to go into negative equity or anything like that. So you want to make sure there's enough equity in your property. So if they bought a property, say for 200,000, and then they put in, the 10% deposit, which is 20,000, and got a mortgage of 180. And then later on down the line, they do work on the property and increase the property to say 250,000, then they've got that 50,000 equity within their property. So by doing that, it does give them a bit of a cushion. The other thing I'd say is with the interest rates, I mean, no one has a crystal ball, so I can't come on and say they're definitely going to go down or anything, but it is predicted that they will settle at about 3.5%. So what I would recommend, and this is what I've recommended to a few of my clients, is if you are ready to buy and you've found the property that you want to invest in, don't wait. What you can do is there's different types of mortgages. So normally you've got the fixed rate mortgage, which is a fixed rate for a certain period of time. So make it 2, 3 or 5 years normally. Then you've got the variable rate, which can go up and down depending. And then you've got what's called as a tracker rate. Now, there are some tracker rates out there that basically they do move with the Bank of England rate, but they can be as little as like 0.75% on top of the Bank of England rate. So, and the other thing to be aware of is with the difference with a variable and a fixed rate is normally you are tied in. And if you try and leave the fixed rate, then you'd have to pay what's called an ERC, which is an early repayment charge. Now, there are some trackers out there that don't have any charges if you want to leave. So what I've suggested to some of my first time buyers is buy your property on a tracker, and then as the Bank of England rate is going up or whatever it's doing, keep an eye on the fixed rate. And as soon as the fixed rate starts to go lower than the Bank of England rate, and they do reckon once inflation has calmed down, this is a strong possibility, then because there are no charges to move, you could actually change mortgages any time. So a tracker isn't fixed for 2, 3, 5 years. A tracker you just stay with, you could stay with for a couple of months if you wanted to. So you get the property, work on doing it up, adding value to it, keep an eye on the fixed rate. And of course, you can use a mortgage obviously advisor to keep an eye on the rates and give you a tip off when it's time to move from the tracker to a fixed rate. But that's something you could do. And by finding a tracker that doesn't have an early repayment charge, doesn't have, a cost in it, then you could get on the property ladder that way and then move across to a fixed rate when it was more affordable for you.
Wow, that sounds very helpful. I hope they find this helpful. They might be here listening in the background, because I know some of my subscribers do listen in the background, or they might listen back later on. So that's very helpful. Thank you very much. I'm just asking this from,
Yeah, of course.
what if you are the type, I am the type, I don't do DIY and I don't like doing things up. I just want to buy a property, at least that I can move in, that maybe just cosmetic, you know what I mean, just lick of paint or wallpaper, if that's what I choose to do. So if you're in that position, you're not really the type of person. Before I go any further, let me just welcome a few more people. Isheshe, thank you for joining. And Temi, Becky's Kitchen, thank you for joining. And all those of you who are listening in the background who are not chatting, thank you. You're also welcome. Yeah. So if for in this their case, if they like example you gave, if they are buying £200,000 house, and the 10% means they are borrowing 180, right?
Yes.
Okay. So, and if they are not prepared, if they are the type who do not like DIY, who are like me, like the example I gave. So, what should they?
Yeah, I mean, you can still buy the property and do the tracker idea. I mean, what I was just trying to say is just what people need to be aware of, because everybody's talking about property prices possibly going down. If you're in it for the long haul, then it'll probably even itself out anyway. So even if it goes down temporarily, the likelihood is property prices will go up again. Property prices, they will always be strong. People will always want property. There are some, countries in the world that the majority do rent. That has never been a UK thing. We always buy our property. So I think, and the other thing is, as a first-time buyer, the likelihood is they're going to be buying, depending on the area, but if it's, sort of local to me, for instance, they're going to be buying sort of a 1 or 2 bed flat, then that is the first step of the ladder. So then as they expand, possibly have a family or whatever they want to do, they may consider sort of moving on, and then their property, other first-time buyers will want it. So there'll always be a demand for first-time buyer properties, be it by first-time buyers or even by investors. So I think it isn't really a concern. The only thing I'm trying to overcompensate is, I mean, to be honest, I did a mortgage, when was it? Thursday, and the rate was in the 4 percentile. So at the end of the day, It is going down. It isn't as bad as it was. What they also may consider then is they've got their 10%, can they get a little bit more? If he doesn't need to buy, say, because it takes sort of 3 to 6 months for the whole thing to go through. If he wants to do it maybe next summer, he's got the whole of this year, because he's 38, he isn't even 39 yet, let alone 40. Maybe they could both work on saving for another year and put in a bit more of a deposit. And when he says 10%, does he actually know what the two of them can afford, to know what they're borrowing in order to know what they need 10% of?
Yeah, I think from the way he said he sent the question. I think they've kind of done all their
Worked all of that out. Yeah,
that's why they took time. And I think from, because I know them in another group, so I don't really want to give
Oh,
their,
okay.
their
Yeah,
identity.
yeah.
So I think they already have 2 children. So this
Oh,
is something they
okay.
have worked towards for a long time. This is why he's really kind of, this interest rate just threw him out.
Yeah, yeah. Unfortunately, I mean, the interest rates, the likelihood is in the long term it will go down, but it is going to take a couple of years, and obviously that's going to hit that 40 limit. But yeah, I'd get on the ladder and possibly go with a tracker. The reason why I'd say a tracker and not a variable is a tracker, all it does is factor in the Bank of England rate. So as I said, it could be 0.75, it could be 1% on top of the Bank of England rate, whereas a variable rate, it may not move as often when the Bank of England rate goes up or down or whatever happens, but depending on the actual bank or building society, the variable rate can move when they are, for whatever their reasons, looking at their business as a whole and deciding whether they want more business or they want less business. They will move their variable rate based on that.
Okay.
So that's why you've got to be more careful with a variable rate as opposed to a tracker.
Okay. Thank you very much for that, Manda. Luana, you said is 20% here. So it means, does that mean 20% is the deposit that is required in Switzerland? Probably. Maybe that's what you're trying to say.
Yeah,
If
maybe
that's what
that's the
you're trying to
minimum. Because over
say,
here,
maybe that's the
I mean,
minimum.
you could even get 100% mortgage over here.
Yeah, yeah.
As long as you've got some, I can talk about that later anyway.
Okay, thank you. So yeah, I think there was a question I wanted to ask following that, but yeah, I can't remember that. I'll probably remember later. I'll ask that question. Then the second question that was sent in is: we are in our early 60s. This is a husband and wife. Our son and his wife are considering moving far from us because they can't afford to buy locally. We want to release some equity. Sorry. We want to release some equity in our paid up home so they can buy locally, as this is, I think they wanted to say this is, I just copied these questions and paste them. This is also, yeah, I'd say these are, this is saying here, this is also stopping them from starting a family. Does that make sense?
Yeah,
So,
that's, I can answer that.
thank you.
Yeah. So basically, there's a couple of options when you want to help your children. There's one product called the Joint Borrower Sole Proprietor Mortgage, and that's based on affordability. Now, if they have decent pensions, though, they could use that to help with affordability. And what they would do is, if it was the 4 of them, for instance, so the parents plus husband and wife, then they would look at all 4 of them, their affordability as a joint. And the way it would work is the parents would be on the mortgage but not on the deed, and then it's more of a paper exercise just to say, do they have, and that's if they've got good pensions that will cover, or if they're still working, because they're in their early 60s, they may still be working. So they could look at pension and earned income. The other thing is, as I mentioned before, you can actually get 100% mortgage, and I've actually done that for a client, I think it was last week. And basically the way it worked was, by putting down the collateral, so they put down a charge on her mother's property, and that charge was 20% of the of the value of the property she wants to purchase, not 20% of the value of her mother's home. And then that way, when they're looking to get a mortgage, they've actually got that 20% deposit. And the way it would work is, you either put a charge on the property, or again, if people out there have savings, they can actually move their savings. There are some lenders that you'd move the savings into a bank account, a savings account with that lender, and they would give you interest because it's your savings sitting there, but it would also be collateral against it. So there are a few options that they can look at.
Wow, that sounds really good. Yeah, that sounds good. Thank you. Yeah. Also, Luana said, yeah, the deposit in Switzerland is 20%. Oh, wow.
Okay.
Yeah.
It's a lot.
Yeah. So yeah, that's a good one, isn't it? Because I actually know this couple. I mean, they has they're a friend I know from way back. So, but what is the mother is really distraught because, okay, not quite. That's a strong word. She's kind of, she doesn't want them
Concerned.
to move far.
Yeah.
She's
Hmm.
concerned. She doesn't want them to move far because obviously she also wants them to, because it's not that they really want children. Is
Yeah.
they want to buy their home first.
Yeah. And then have the kids, and she wants to be the grandmother and
Yeah,
help. Yeah.
yeah, we want them to be nearby as well. So she doesn't really want them to move far. And the husband is slightly older. Not they're
Yeah.
still the husband is about under 65, but closer to retirement. But he is concerned. The reason why he doesn't want the equity in their property because he doesn't want to retire and be paying mortgage because he's just enjoying the freedom that he doesn't have to
Yeah.
mortgage anymore.
Well,
But
that's why it
he's
would
saying,
be.
yeah,
Sorry, Mabel. So that's why it would be a charge.
that's
So I probably didn't explain it very well. I
no,
mean, you
you did,
can
but
do a
you did.
remortgage and take the money out. You can
Yeah,
do that. But what I
yeah,
meant is you just put a charge. So it's like an IOU, just for
yeah.
everybody so they understand. It's an IOU on the
Thank you.
property.
Yeah,
So in my example with my friend with the mother and daughter, they've just put an IOU on the mother's property. It does appear on her credit report, so just to be aware. But because she doesn't intend on moving anytime soon, she's happy
yeah,
where she lives.
yeah,
She doesn't have a mortgage, so it won't affect the remortgage. Because if you did this with a property that had a mortgage on it, it would be a second charge after the first charge, which is their mortgage.
yeah,
So it would affect when you're trying for a remortgage, they would also look at that loan put against it. But if it's completely paid off, then that's not a problem. So
yeah,
it doesn't, they don't get charged any interest.
yeah,
There's an admin fee. So what would happen is, say in 5 years' time they can afford it on their own,
yeah,
we would do a remortgage, and we'd take that charge off the parents' property,
yeah.
and then they would have a mortgage in their own right. And then what would happen is there would be an admin fee for taking her off, but there wouldn't be sort of interest on and payments on a regular basis.
Wow. Thank you very much. That's really good because, oh, hi, Code with Samia. Thank you for coming. Thanks for, yeah. Um, that's really, really helpful because I know the mother's argument was that what's the point allowing them to move far when they are his only child, that when they die, the property is going to be his anyway. So, so what's the point? Just hoarding it now when in the end it's still going to be his property. So, and
Yeah, but even with that, Mabel,
yeah,
if they have a mortgage-free property,
yeah,
and when they pass away, it goes into their estate as probate, and
yeah.
then the inheritance tax is paid on all of it. When if they actually had a mortgage, what the way it would work is their inheritance tax would only be paid on the unmortgaged part. So
Okay.
sometimes it's worth having a mortgage on your property. The
Okay.
other thing is there's the 7-year rule. So if obviously it depends how they feel about their children, but if they actually put the property now into their children's name,
Mm.
then when it does come to inheritance tax purposes, there wouldn't be any inheritance tax, because if they put it in their name and 7 years passed and nothing happens to the parents, then there is also that element as well. There'd be no inheritance tax. So I
Oh,
suppose you kind of have to look at, but then obviously by putting it in their name before they've bought their own property might affect their stamp duty on first time buyers. So you just need to weigh everything up, really.
okay. Thank you very much. That's very helpful. So then the third question, those of you are in the audience, and those who, I mean, those in the chat or those listening in the background, um, if you still have a question, please think about it and put it in the chat. Mr. Code, I know you are somewhere in the UK. I can't remember whether you're in Ireland or somewhere in the UK. So this might be relevant to you. I know Temi Becky is in France, I guess. So, okay. This is a very valuable discussion. Thanks, Mabel Manda, for sharing your knowledge. I've got to go. Okay, thanks, Mary. Thanks for
Oh,
listening.
thanks, Mary.
Right. Yeah, Mary is in the UK. I know there are a few people here that are in the UK, but only those two people so far, the one that are not in the UK. Okay. Right. The third question. uh, I'm I'm a single lady, no children, and I'm turning 53 this year. Um, I have some savings towards deposit. Am I too old to buy my home? I don't want to be renting when I retire. What are the challenges that I should be aware of?
Okay.
I don't know this person on a personal level, but it's in one of the group that I belong to that they send the question to me from, but I don't really know the person. I don't know the background story. So just give a general answer, probably from the two.
Sure, no
Yeah.
problem. Right, so I'll split the answer into two. So if she's in her 50s and she is employed, then depending on what she does for a living, you can probably get a mortgage up to about the age of 70.
Okay.
If she's again in her 50s, but she's self employed, then depending on what you do, you can actually argue right up until probably 75, possibly 79, before your 80th birthday, basically. So, depending on obviously the size of the mortgage she's looking at and how much savings she's got, there is that element. The other
Mm.
thing she could look at is things like shared ownership, where she just buys a portion of the property. The other thing she could look at is, I talked about the joint borrower sole proprietor. There are lenders that you don't have to be a blood relative. So I had one lady, she was actually getting divorced from her husband, and she couldn't afford to buy him out. And he was just like, well, you either buy me out or we have to sell. And it was their family home. So her best friend, who is a dentist who earns, quite decent money, went on the mortgage with her for affordability, but not on the deeds. And then that way it was able to sort of boost her affordability. So the joint borrower sole proprietor is quite adaptable. It doesn't have to be a blood relative. It can be someone who's willing, to do that. And with the joint borrower sole proprietor, you would have the, as I said, you'd have the liability on your credit report. So you've just got to be aware of that, whoever is being the donor, willing to be on it for affordability. And also you need to get independent legal advice from the other party, so they're after your interests when the other one's after their interests. So there are some options. I mean, just because you're in your 50s, it isn't the end. The other thing is, if she's got a really good job and she is retiring at a certain age, but like if she's 53 and she's retiring at 55, but she's got a really good company pension, then you can get
55 or 65. Do you mean
no,
retirement?
55, because you can get your pension from 55.
Okay,
So I'm just giving, another example.
okay.
But even 65, whenever really, between 55 onwards, if she's retiring, but she's got a really good company pension, then they will lend you based on your pension, because the thing about a pension is, you could lose your job tomorrow. Do you know what I mean? No offense to anybody out there, but with a pension, it is so much more durable, isn't it? So lenders are much more comfortable than they used to be about lending on pensions, because they've realised if you've got a really, really good pension, it's going to pay you out till, the day you pass away. So why not borrow on it?
Okay.
So there's the three things I could think of, speaking generally.
Thank you. So I'm just thinking of myself now.
Yeah, go for it.
Now you're talking about pension. So if you want to base your mortgage on your pension, so that means you will contact your employers, your work-based pension, and want to find out the size of your pot or the amount of your
exactly. They'll ask you for the size of your pot and everything. So if you're employed, not quite gone into your pension, but you want to include both, then that's how they'll do it. But I did help a lady the other day get her, well, it's over the summer actually, get her first bungalow, because she wanted to get her own little bungalow. And her husband passed away, but she was still getting his pension. So I managed to get her a mortgage based on his pension that she gets paid, her pension, and then her benefits as well, because she's disabled. But they are, as long as you can prove the benefits will last for the term of the mortgage, she was able to get a mortgage, and she was able to get it up to the age of 99.
Oh, wow. Wow, that's good. Thank you. Thanks for that. Oh, let me just welcome a few more people. Oh, Stella White Dynamic, thanks for coming all the way from NAIJA. And Prosper coming, thanks for coming. Oh, you are in one of those Southern Africa countries. Can you remind me, please, my South African brother? That's my young adopted brother. Please remind me, Mr. Prosper, you are the one that like everything about Nigeria, or the Nigeria comic and everything. So please, those of you who don't live in the UK, please, I think this is valuable knowledge for you too, because I know most African countries are developing their mortgage system further. They're a bit more robust than before. So yeah, so there is valuable knowledge to learn from this. And some of you who are working towards probably sending your children here for study. So you have the knowledge, experience, you have the experience of the knowledge. I know some of you are billionaires in Nigeria, in Africa, who can afford quite a few things here that even those of us in the diaspora can't afford. So yeah, it's knowledge. The knowledge is important for everybody.
Well,
Okay.
actually, it's funny you mention university, because there is a good product that's out there that's called the Uni to Let.
Oh wow.
And what it is you can buy the property, your child can live there, but it's a buy to let mortgage.
Okay.
So say, for example, you bought a 4-bed house in Liverpool, for instance, then your child, while they're at uni, could be living in the one room, and then you could rent out the other 3, and the rent would actually cover the mortgage. And they could actually be living there rent free right next to a uni. I mean, it's good rental possibilities, because it's got good rental potential, because it's right next to a uni. You'll always have students in and out, and they'd be paying the mortgage for you. You could even make overpayments on the mortgage, and by the time they graduate, they've had half their mortgage paid off, for example. I mean, especially in those areas, it's a lot cheaper, isn't it? Yeah. So you'd need 25% deposit, because it is a buy to let, but it still is a really, really good product. And there's only a couple of lenders that do it, actually. It's quite specialist.
Oh, wow. Thank you very much. Yeah. Yeah, coming. Yeah. Oh, God. Is it echoing?
I can't hear an echo.
Okay. I was hearing something before. I don't know where I was hearing it from. It's not my phone. My phone is just on the notes. Yeah, coming. You say, wow, have you? Oh, you maybe wanted. How have you been? Okay, how have you been? Wanted to say, this type stuff. They just run away with you sometimes when you're trying to type something. Can you remind me which country you are in again, please? I know you're in one of those South African countries. Then the 4th question, and please, those of you in the audience or in the chat, please, if you have any question, put it in the chat for us to answer. I know Luana already said about the 20% deposit that they have in Switzerland. So those of us in the UK or other part of Europe, or maybe US as well, I know US people, they have a different system. So that obviously will kind of it's a good thing that we have a lesser deposit. But to be honest, I think our level of wages is so varied that some people are very low income. So I think it's good to have that option. Don't you think, Manda?
Yeah, no, absolutely. Absolutely.
Yeah. Okay. Oh, thanks, Mr. Prosper. You are from Namibia. Oh, welcome. Thank you. Right. Number 4. The 4th question we have here is, my brothers and I are concerned about inheritance tax.
Yeah.
As our dad is very old and our mother unfortunately passed away last year. We all, that's 4 in bracket 4 siblings, have equal share in our parents' will. However, we have contributed over 45,000 towards the renovation of this family home in the last 8 years because we wanted our parents to be comfortable. So yeah, please.
If I mention
inheritance tax, is it clear? Does that make sense? What they are concerned?
Yeah, I mean, basically, what I would say is, as for the worrying about the inheritance tax and they've got equal portions, they could get the property as long as the the father is okay with it, they could get the property transferred into their name now. And then there is the 7-year rule. So as long as he lives for the next 7 years, then they don't pay any inheritance tax. If unfortunately he passes away within the 7 years, it's prorated. So, you know, if he lives for 6 years, then it's less than if he lives for one. Sorry, it sounds a bit morbid, but that's kind of the way it works. As for the £45,000 that they've invested, I'm not 100% sure how that works. You need to speak to a probate solicitor on that. That wouldn't kind of be in my I don't know the answer.
Yeah, thank you very much for that, because I think I kind of know these people a little bit, not a lot. So they kind of I think what made it to come up, it was somebody actually brought it up to say, I think somebody had an issue with they had a huge bill of inheritance tax. Where did it even come up? No, it was on EastEnders recently. Dot, I don't know if anybody watches EastEnders here. So Dot passed away and handed over the property to Sonia. I think it's a granddaughter. Is it by marriage? I can't remember how they're related. But
yeah, it is by marriage. She was married to her grandfather. That's
right. So this question came up before that last episode when that guy was sorry about it. Those of you who don't live in the UK, it's a soap. It's a regular soap. I watch it. That's the only thing I actually watch.
Well, you could just talk about the actual principle of it. So the grandfather married the grandmother, and then when they both passed away, the granddaughter inherited it. And I'm assuming it was mortgage free. So because of that, they would have to, after the inheritance tax exemption, they need to pay tax. I think it's about 40%. To be honest, I haven't dealt with tax for quite a while, so I'm not sure of the percentages. We'd need to look it up.
It was 40%. They wrote a letter to her.
Yeah, so they would have to pay all of that. But as I said, if it was a mortgaged property, what they do is you don't pay tax on 100%. You only pay tax on the unmortgaged part. So yeah, I think that's the only time it's not worth paying off your mortgage. But as I said, there is the 7-year rule. So if she'd given it to her earlier, it wouldn't have been an issue. Also, and it's something I can put people in touch with if they're interested in more detail, but you can put properties in trust as well. So when you have your will written, and I'm not a will writer, but I'm just a little bit of information that I've picked up along the way. When you're having your will written, make sure your estate is ring fenced into trust, and then that helps with your tax planning as well. So I think it's really, really important out there. I mean, unfortunately, we're all going to pass away eventually. And once you've bought a property, one of the first things you should also be looking at doing is sorting out your will and sorting out, your protection to make sure that you can make your mortgage payments. Because there was one girl that I'm doing a right to buy for now, and she has major concerns about having that kind of debt herself. And I said, well, there's a couple of things we can do. First, we can make sure that you've got income protection. So if unfortunately you do lose your job, then an income protection is better than mortgage protection. Mortgage protection only covers your mortgage payment, but we don't just pay a mortgage. We've got, electricity to pay, water to pay, food, everything, haven't we? So income protection actually gives you compensation for the income you've lost, as opposed to just covering a mortgage payment. So that's quite important. The other thing to sort of be aware of is just to budget well and to put money aside. What I try and do when I first bought my first property was just put money aside, so I had 3 months worth of money just in case, because you never know what's going to happen. So it's good to sort of have precautions, and from the beginning, before you've even bought the property, get used to putting money aside to cover the mortgage payment. Have that sort of mindset in your head that you need to pay, and make sure that all your bills are paid first, and then divide what you've got left by 4, and then have a weekly budget out of that. And there are tricks and trades really to sort of help.
Absolutely. Thank you very much. And thanks, Manda, for, I don't know why I always add that it. That's the old brain. That's the old. I actually have a very close colleague at work who was Amanda, so probably that's why I'm so used to calling Amanda all the time. So yeah, so I have to try Amanda. Yeah. So yeah, thank you very much for bringing me back. I got carried away telling the stories there, isn't it? I always tell stories on this my channel, especially when it's live stream. Thank you very much for that. So yeah, thank you. That's really helpful. Yeah, very helpful. Oh, our sister Uju from across the pond, our USA sister. Thank you for coming. Thanks for coming to support us. So before I give you opportunity to tell us about how we can assess your talent of moving forward. By the way, Manda has her own YouTube channel and it's full of a lot of stuff. The things she's talking about today is just like a tip of the iceberg. It's just, you haven't even scratched the surface at all, the volume of content she has on her channel. So please, all of you that are here, when you finish, please just go and check out and just support Manda for us, please. It's the only way we can thank her for coming to support us today and give us this wealth of knowledge. Yeah. Then, so before we do that, actually, before Manda will tell us all about that, I actually have a budgeted template. So my last video, after this live stream, I'm going to put the link somewhere on this, either the chat or the description box of this video. So I have my last video, actually have a well-developed budgeted template, and I talked about it all on that video. So this putting money aside there, they call it emergency fund. They call some people call some things a sinking fund. All of it is all covered by my budgeting template. So I've taken a lot of time to develop it. So I'm very proud of it myself. So yeah, and thank you very much. And please, if any of you have questions, when Manda finishes with these mortgage questions, we're going to just answer one or two general finance questions. I know some of you are here, you live in other countries, so you might not necessarily be interested in mortgage, or it might not really be UK system of mortgage might not really be very, very relevant to you. And our brother called with Samia, I know you say you live in Scotland, so it's relative, it's related to you in a great deal. So you might have slightly different, just a very slight different. I know a friend who bought a property in Scotland, from London, from UK, buying in Scotland, or from England, buying in Scotland. So yeah, over to you, Manda, please. Tell us how we can reach you and why you just summarize. If you want to continue to stay with us, we are happy for you to stay, but if you want to go, we know you're a very busy person, so you can choose to go. Yeah, please, over to you.
Okay, so yeah, thanks again for inviting me, and thanks everybody for your comments in the chat. You've got a very warm community, Mabel.
Thank you. Thank you.
Yeah, so as Mabel mentioned, so I have a channel called Mortgages and Money Matters, and I started it last year. It's got like over 70 videos all about mortgages and money matters, and all sort of things about money mindset, and so much information about different types of mortgages and right to buy and loads of different things. So feel free to sort of check it out. The other thing is, I have a membership called Get Mortgage Ready. And it's all about getting mortgage ready. So basically, there are a couple of courses in there. I meet people every other week to give them coaching, and same like with Mabel. So there's a budget there. I explain how to save a deposit. We sort of work on understanding how mortgages work, so you've got the knowledge, because it's really, really important, rather than just getting a mortgage, understanding how it all works. So that's my thing. It's just those couple of things. So if you could subscribe to my YouTube channel, I'd really, really appreciate the support. And no, thanks, Mabel, for letting me on. Thank you.
Thank you very much. Please, I really appreciate at least, if not all of you, if some of you just go over there, please, and you will definitely learn something about money, even if you are not going to buy a mortgage yet, or even have mortgage knowledge to share with your friends and family members. So yeah, please do that, and just say you're from Mabel, so Manda really know that you're from here. Yeah, please, it will really be helpful. That's the only That's the bunch of flower we can give to her. They do that in the UK. If you come to give a speech or a lecture, people always give you that bag or something, a bouquet of flower or a bunch of flower, whatever you guys call it in the UK.
Virtual flowers. Virtual flowers.
Virtual flowers. Okay, but these days they give the real one, isn't it? When you come to speak, isn't it?
Yeah.
So
but,
yeah,
but subscribing to my YouTube channel are like virtual flowers. That's
thank you. That's right. So yeah, so that's virtual flowers there. Thank you all very much. And I'm going to the name of Manda's mortgage YouTube channel is the same thing, the same way it's written on the screen, isn't it? Mortgage.
Yeah, mortgages and money matters. Yeah.
But however, I'm going to put it in the description box of this video, and also the link to her website, which is the
Get Mortgage Ready.
Mortgage Ready. So yeah, thank you very much. Do you still want to stay or you want to leave us? I just want to see if anybody have other finance questions so that before we round up.
Yeah. If anyone's got any questions for me, I'm happy to answer, and then I'll head off.
Thank you very much. So yeah, if any of you have finance questions, because like I said, Manda channel is about mortgages and money matters, as you see. So, but today she came mainly for the mortgage questions, obviously, because I'm not an expert in mortgage. That's why I decided to bring our wonderful expert here to talk to us about it. And I know I have learned a lot as well from even the way Manda answered some of answered the questions. So, right, any finance question, or if you don't want to write in on the chat, does any of you want to come? So I'm just going to click on the link. I haven't done this for a while. So yeah, I'm going to click on the link and put the link in there. I know some people might want to come up and speak. So you don't have to come with your video as usual. You know, you don't have to come with video. You can just come with your voice. So if any of you want to come up and speak, just click on the link and come up and talk to us instead. I mean, then we aim it to wind down. It's 46 minutes into the hour now. We don't want this. I don't really want this to be more than 1 hour today. So it's my first. Oh gosh, I don't know where that comes from. It echoes to me something. I don't know where it comes from. Okay, so I don't, because it's my first time back after so many months. Because a lot of people have been asking me to come back. So moving forward, actually, just to let you guys know, I'm not going to be doing my live stream weekly. I'm currently considering every 2 weeks or once a month. So it's going to be either of those two. So I will head there. Thank you, Manda. Okay, Stella White is heading to your channel. Thanks, Stella.
Thank you.
So any finance questions? Do we have any finance questions? Thank you for coming back, Mal. Thank you. That's Luana. Thank you for coming back live, Ma. Thank you very much.
Oh.
I really do enjoy the live streaming though, but it's just that obviously when I was working on the Ebomebo Academy, because I was learning a lot of stuff, tech and things I've never done before, and
it was a lot.
Yeah. Manda was very helpful along the way at some places, so it was really good. It was a learning process, but it was a worthwhile experience. We learned quite a lot of new skills.
Yeah, we did.
So yeah, and that's one thing I want to tell all of you. Please, this year, we're coming to the end of January, so this is actually why I desperately wanted to do this today. I had to push myself to make sure I do this today. Amanda, thank you for bearing with me, because I was supposed to advertise this during the week. I didn't do it till late last night, and I couldn't even speak to you to ask you how you wanted that your photo. I just have to get it from somewhere and put it there.
Yeah, no, it was all good. It's all good.
So yeah, because I just said I must do it by this last Saturday of the month. So what am I trying to say? All of you might have had goals you have set this year. There are things probably been pushing forward for so many years. And now we've already come to the end of January, to be honest. Tuesday is the last day of January. So don't despair. We still have 11 months to go. So let's make it count, please. So if you have any goal that you are trying to set, like me and Manda, we just told you how we have to push through to set up our online businesses. And we may look at, even if it's just this collab and this relationship, sometimes there are certain things that is worth the experience, and the people you meet along the way even make
Absolutely.
it more worthwhile. So please, if you have anything you're planning to do this year, just keep it in the DM me. Those of you have my DM, and a lot of you actually have my direct WhatsApp number, or you can put in the community chat, anywhere, put in the comments. So if you want us to cover the topics you want us to cover the subsequent live, please put them there. I'm going to try and do a poll on the community tab, but besides that, please just put it in the comment section of this video, of this live stream. The topics you want us to discuss in the subsequent live stream, so that we start covering them this year. I really want us to be relevant. I don't just want to come here and just chit chat. I want to add value. I want it to be topics that is really, really going to be useful to all of you. So please, yeah. And Olu, just thank you, Olu, for coming. Very interesting information. Thanks, Manda. Thanks, babe.
Oh, thanks, Olu.
So yeah, thank you very much for that. So if any of you, none of you want to come up and say something, or you don't have any other question, so should we just wind down for today then? So if you want us to wind down for today, just give me a thumbs up. They'll say yes in the chat, because I don't want to spend time just dragging live stream. That's one of my New Year goal. Don't want to call it resolution. I don't want to just drag live streaming on because I'm waiting for more people to join, or because we just want to chit chat. I really want, okay, yes. So Luana, thank you very much. You're one of the first people here. So on that note, we're going to wind down today, and we're going to close this live stream. And please, like I said, please leave it in the chat, or whichever way you get through to me. Let me know the topic you want to discuss in the live stream, because I don't want to come here and just say the things I want to do. Otherwise, I'm not going to do the live stream. So we want to make it relevant. And all of you, please, even if you don't take anything away from today, think about developing yourself. Think about yourself this year. One thing that you always wanted to do that you're struggling with because you couldn't do it, either you genuinely don't have the skills and knowledge to do it, or you're just procrastinating. Make sure you try and develop yourself. And the Ebo Academy is a good way to get that done. So yeah, I just want to plug that here. So yeah, Manda, please just say the final word before we go.
Yeah, thank you, everybody. And yeah, it was been lovely meeting you. And if you've got any questions, then by all means message me. That's not a problem. I'll ask Mabel to put my email, so you can email me if you've got any questions. Thank you. And thank you, Mabel.
Thank you very much. So on that note, we're going to say goodbye and all the best, Manda, with your business. Yeah, Luana said all the best.
Oh, thank you. Thank you, sweetheart.
Yeah.
Oh.
And thank you, everyone. And God bless you. I'm likely to see you guys either in the next 2 weeks or in a month's time. So all the best. Thank you now, and bye.
Bye.
Bye, everyone. Bye. So I'm going to end the broadcast.